Ladies and gentlemen, good afternoon. Welcome to HPL Electric and Power Limited's Q4 and FY'25 earnings webinar hosted and produced by Eloise. I am Shankhini Saha, Director of Investor Relations from Dickinson, and I'll be moderating our call today. So joining us from the HPL management team today is Mr. Gautam Seth, Joint Managing Director of HPL. Please note that this conference is being recorded and that some statements in this call may be forward-looking, based on current expectations, and subject to risks that could cause results to differ materially. You can download HPL's investor presentation and press release from the links in the community chat or directly from the company website or the NSE. I'll now hand the conference over to Gautam to make a few opening remarks. Over to you, Gautam.
Yeah, thank you, Shankhini. Good afternoon, everyone, and thank you for joining HPL's Q4 and FY'25 earnings call. I will spend the next few minutes walking you through what we achieved last year, how each of our businesses is shaping up, and why we feel confident about the road ahead. A quick look at financial year 25. Last year was our best year so far. Revenue touched about 1,700 crores, up 16%, and EBITDA grew a third to roughly 255 crores, lifting our margin to 15%. Profit after tax crossed 90 crores, more than double the year before, with PAT margin crossing 5%. The March quarter kept the momentum alive. We booked revenue of 493 crores and an EBITDA margin of 16.7%, both record highs for us, while PAT jumped to 37 crores. Now looking at how the businesses stack up, smart meters is one of our key growth engines alongside wires and cables and switchgears. Rollouts under the AMI-SP framework are moving quickly, and they now account for our entire 3,500 crore order book, giving us clear visibility for the future, where our focus remains on execution. Wires and cables have delivered 3 straight years of strong double-digit growth, helped us by a healthy real estate cycle, infrastructure spending, and a retail network now spans more than 85,000 touch points. Domestic switchgear posted mid-teen growths despite some slowdown in demand in industrial switchgear, but thanks to a richer mix of high rating products and tighter engagement with our distributors. I'm pleased to say that lighting has turned the corner as sales went up 30% in Q4, bringing the full year back into positive territory. While looking at execution and balance sheet health, our margin gains comes from a better product mix, smarter sourcing, and first benefits of plant automation. Debt levels remain manageable and enjoy comfortable EBITDA coverage. As we enter FY'26, our focus is to scale up smart meter production to stay ahead of the national rollout timetable, deepen the automation in all our factories to protect margins as volumes climb and ensure a more consistent and better product, speed up the product development so we remain first to market in advanced metering, lighting, industrial switchgear, wires and cables, etc. For instance, earlier this quarter, we teamed up with Wirepass to unveil India's first Wirepass certified in-meter RF gateway, a dual radio smart meter solution that removes standalone gateways and sharply lowers AMI rollout costs for utilities. We will also widen our distribution network by adding more channel partners and expanding our service footprint as execution on the ground remains integral as India's electrification story gathers pace. I would thank all of you for participating today. FY'25 reaffirms our focus on smart metering, wires, switchgear, lighting, where growth was followed by improved margins and balance sheet strength. With India's economy expanding and nationwide smart metering and electrification gathering pace, we have a clear runway ahead of us. Thank you for being part of HPL's journey as we enter a new chapter of growth into the next financial year. With that, I'll be happy to take your questions.
Thanks, Gautam. We'll now start with the question and answer session. As a reminder, please raise your hand to join the question queue. Here's a quick reminder on how to raise your hand. If you're on desktop or laptop, look for the reactions button at the bottom of your Zoom window. Click on it, then select raise hand from the options. Your name will appear in the queue and I'll call on you in order. If you're on mobile or tablet, tap on the more ... button at the bottom right of your screen, then select raise hand from the menu. Our first question will be from the line of Viraj Mahadevia. Viraj, your line is unmuted. Please go ahead and ask your question.
Hi, Gautam. Congratulations. Absolutely breathtaking results. And hopefully this is the start of a much longer journey ahead.
Yeah. Thank
Gautam,
you.
with your 3,500 crore order book, which is now largely smart meters, which has pivoted the mix in favor of smart meters as higher margin products. Could you expect that half of that could be executed in the year ahead in FY'26?
Yeah. So these, each of the orders what we have are as per specific schedules of different AMI SPs. Now each one is currently at their different levels of execution. But broadly, if you look at in the last 3 months or in the Q4, we have seen the pace of the implementation that has increased, and the overall pace is much better now. So we have all-round demand from each of the AMI SPs for our smart meters right now. So I would say it's probably, we would be looking at a good growth again this year because we've done 1,075, and we should be looking at a strong double-digit growth. But whether maybe half of them would go, but it is actually on specific schedules. So we may have some new orders coming in which would be going in the current year, and some of them like this. But broadly, yes, the overall growth in the smart meter is good. We have said that earlier also. The execution is even the execution from our end and the implementation at the AMI SP end has improved. And I read somewhere, there was a news that they have crossed even 100,000 meters per day. So overall, I think.
This is why my question. So the data point I read, Gautam, was FY'24, they were being installed at a rate of 11,000 a day.
Mhm.
That stepped up to 80,000 in Q4. And in April, it was as high as 1 lakh per day. So,
Yes,
with
probably.
that
Yes.
and your expanded capacities in place, whether now that the market opportunity is here and customers obviously are looking for your product, whether you can accelerate the execution and delivery.
Yes. So right now, if you see our execution, we are on schedule with each of the AMI SPs. So as and when the demand comes in, or the demand is there, there's no doubt in that. So we are there to supply that. Yeah, for sure. So
But out
yes,
of this 3,500 crores, how much is scheduled to be delivered in FY'26, if I may ask
probably
that?
I can, I can probably get back on the specific number. And
Sure.
yes, because each of the orders what we have, initially there was a lag of, let's say, about 6 months before the first supplies would begin, and then
Sure.
2.5 years for the execution. So definitely,
Understood.
I would say maybe well over 1,000 crores in this would be scheduled for the current one. Yeah.
Understood.
Correct.
Your employee expenses have moved up, obviously, as you've hired some labor and employees. Do you expect it to move up further from here in terms of headcount, or now is it just in line with inflation?
I think it's because if you see Q4, our numbers are in fact lower than or almost equivalent to the last year.
Correct.
If you see even quarter on quarter or this one. So I think because we had invested earlier. If you recall
Right.
the earlier calls also, we
Absolutely.
discussed that, we were putting in people for R&D, fresh people for, a lot of material plannings or even on the production side. But I think that is pretty much stabilized, I would say. But still, with the employee expenses, you have to account for the inflation, and everyone is looking for growth. So that's what it
Understood.
would be.
Sorry, just a last question, and then I'll come back. Can you guide us towards a CapEx spend for FY'26, given that now most of your CapEx, I'm assuming, is already done? Give a split maybe of maintenance and new build-out CapEx for maybe FY'26 and then the following year, 27.
Yeah, so if you see in the last year, we've probably done a little more than 70 crores overall. And I would say normally our maintenance CapExes are anywhere around 30 crores, 35 crores is our maintenance CapEx. But we did build specific capacities for the smart metering. That is what remained. Now, going ahead, we will see certain CapEx on automations happening on the smart metering side. But broadly, I would say our capacities are there in place now in the smart metering. We are also now, we would be putting in certain CapEx now for the switchgear part on the industrial and the domestic side, and on the wire and cable. Now, wire and cable, we are quite upbeat on that. We've had 3 straight years of growth. I think this year also we would see again a high, very good growth, I can say, on the wire and cable. The demand is there. Our own figures have drastically improved in the last 2-3 years. So we would be going for certain capex as we would in fact also be coming into a lot of new products and new categories within the wire and cable. So as and when those are finalized, so the same would be communicated.
Understood.
So that will be there. So
can you give me a best guess?
Yeah, I'll just give you the figure. Yeah.
Thank you.
If you look at, we would be looking at almost 100 crores of capex, where there would be a mix, obviously, of the maintenance capex, which happens because entire of our product range of switchgears, meters, and all have the tools and dies and all, which are replenishable, over a period of time, although they are capital items. And then the capex would be divided between the 3 verticals, mainly metering, switchgear, and wire and cable.
And then does it peter out after FY'27?
I think with the others, yes, I think that should be then. Then thereafter, it should be more on the maintenance capex. We need to see the growth opportunities thereafter. Like wire and cable, probably if you asked me this, had you asked me maybe a year back also, there was probably no idea of doing any capex. But now with the straight growths, what we are having, we are seeing a lot of new products emerging, new categories are emerging in the market. So that is something which, and these opportunities are there for the next 7 to 10 years, especially if you look at wire and cable. Metering is again a 5, 7, 10-year opportunity. So once the opportunities are there, then thereafter we are accordingly putting in our capex to make sure that we have sufficient capacities to cater to the demand what we can get.
Makes sense. Thank you very much. All the best. I'll come back with you.
Yeah, thank you, Viraj.
Thanks for your questions, Viraj. Our next question will be from the line of Sahil Patani. Sahil, your line is unmuted. You can go ahead and ask your question.
Hi, thanks for the opportunity. Congratulations, Gautam, on a great set of numbers and a great year.
Thank you.
2 questions. One is, I think this quarter our margin picked up a lot, right? I think record high margins. So do you see these margins being sustainable, or do you see them, or is there room for more improvement, or do you see them like, is there something like, we normalize, we reduce by about 14-15%? So just thoughts on that.
Yeah, so we would, our effort will be definitely to maintain and then grow the margins. But if you see the specific quarter, the volumes have been good, the commodities have been fairly stable, and we have seen good growth, even within the consumer and industrial part also, whether it's in wire and cable, lighting, or smart meter. Obviously, has seen one of the best quarters what it has. So if you look at the EBIT margins, the EBITDA margins, the meter is around 18% in the Q4, and so those are, I would say, on an immediate basis sustainable, no doubt on that. I don't see them grow. They may grow depending on the product mix, but Broadly, I would say we will look to maintain those maybe, or if there are some fluctuations, it may come down at this thing. But overall, if you see 17% we maintained in the whole year for metering. The other one also, the consumer and industrial, we are about 11.5% throughout the year. The Q4 was good because the wire and cable saw a very, I would say, positive the commodity cycle that helped the overall margin to improve. But then those are, since the copper prices are changing, so they may go a little up and down. So broadly, as a guidance, if you ask me, I could be like maybe the consumer and industrial would be somewhere around 11.5. Maybe we look to move it up a little bit, maybe up to 12 or something. But the meter right now, for the next some time, it appears that it would be at this 17-18%. That's how we look at it.
Got it. My second question is basically on on the capex front. So this capex that you will be doing, will this be through, let's say, you'll be raising debt, or will it be through internal accruals? Will you be doing, let's say, a dilution, equity dilution? Any thoughts around that? How will you be funding the capex?
Yeah, so mainly through internal accruals and a certain term debt, long-term debt.
Okay, cool. And then finally, my last question is, last year, I think we introduced fans, right? The HPL electric fans. So
Yes.
how's the traction been for that? Obviously, given this summer, right? Have you seen like a pickup in sales? How's the traction been for the fan sector?
Yes, so we have instead I'll just go a little back to the earlier year. We launched the fans actually in the international market first. So we've been we've almost supplied to almost 10-12 countries, and so we got a good response there. We launched them during the current year, and we are currently in few regions right now. And but our whatever regions we are there, we are putting in a concentrated effort. And we have seen a good, pickup from the demand point of view. We've come out with a fairly good range of fans. By the end of the year, I would say we would cover almost, you can say 75% of the market. So we are launching it region-wise, state-wise, because we have the time. We feel it requires a much more concentrated effort. And by next summer, we would be a pan-India player for sure. Yeah. So overall, that's but here the pickup is going to be much faster. That's what we feel by the initial result. Our channels are also, I think, a majority of our channels. If I have to just put a figure, maybe it's about 80% of our channels are already doing fans of some other competitor brands, or they are already there. So we definitely see a good leveraging our own existing channel, plus the focus is also building up a new channel for the fans, because we need to broaden our base anyway. So overall I would say it's a good product, because with this we complete a lot of our consumer products. Now we have 5 of them, whether it is MCBs, modular switches, wires, lighting, and now fans. So any type of residential, commercial, condos, anywhere you look at it, we have now 5 product basket, to push, and it's a huge range. So that should help us. Yeah.
Okay, got it. And just one last thing. Have you seen the momentum for smart meters continue in Q1 of FY'26 as well? Obviously, as you mentioned, Q4 was one of the best quarters for smart meters. So have you seen that momentum continue, in this quarter as well, in the current Q1 quarter?
Yeah. So, yes, I would say, broadly, I cannot give a quarter-to-quarter guidance, but overall, if you see, the smart meter rollout is not dependent upon, let's say, it's not cyclical, like in the sense, like Q1 or Q4 would not bother a execution of or implementation of the smart meters. But broadly, the overall momentum in the first half and the second half this year is going to would continue, I would say, and would grow even further than last year as a whole. You have to keep in mind that during maybe the June, July, pre-monsoon and monsoon, that is a time where the implementation of smart meters there may be a little bit slowdown that can happen. So the AMI SPs being, smart private players, so they would definitely look at their inventories accordingly. But other than that, I don't see any way of slowing down. In fact, the overall momentum, because every state is now pretty much active, all the AMI SPs are demanding that. So I think the graph is going to move up, but there could be a month or two where some slowdowns or some things could happen, but overall it's going to be good.
Understood. Thank you so much, Gautam, and all the best for the future.
Yeah. Thank you, Sahil.
Thanks for your question, Sahil. Our next line of questions will be from Chandresh Malpani. Chandresh, your line is unmuted. You can go ahead and ask your question. Chandresh, you can go ahead and ask your question.
Hello, am I audible?
Yes, please go ahead.
Yeah, thank you for the opportunity, sir, and congratulations on the quarter. Sir, my first question is with respect to our ratings getting improved. So, how will that, result into interest cost saving, or and on the similar lines, would like to know on the working capital side as well, because our what we understand, like we are supplying to the AMI space, so this would result into lower working capital cycle. So, when should we see that translating into our lower borrowings and comparatively lower interest cost?
Yeah. So during the year we've had a rating upgrade from CRISIL. We were A minus, and then that went up to A. So definitely the performance and the balance sheet parameters have improved during the year. And in fact, if you look at the revenues, we have doubled in the last 4 years, and each of the balance sheet parameter has seen an improvement. So we've had a rating upgrade. Additionally, another rating agency, India Rating, they have also assigned us an A plus rating with a stable outlook. So from a rating perspective, that has been good. That has helped us, of course, to get better. We've negotiated with the banks for much better rates, and I think if you see even in our Q4, despite the growth and even certain increase in borrowing, the overall finance cost is lower than last year on a year-on-year basis. So I think somewhere even almost in the complete year also in the financial year, there's no growth on the finance cost. So this is something which we are. I think there's still further scope for us to negotiate and come forward. And going forward, the way the business outlook is and the way our performances are, we would even look at a better rating in the future. So we are working on that. We also see that the macroeconomic, the way we hope that even the interest softening would happen from the RBI, because that is where the global trend is. So that would further help us to reduce our borrowing costs. Yeah. So this is one thing. Looking at the working capital cycle here, in number of days, definitely there are some improvements, although the absolute numbers have gone up. But when we look at the way the business is panned out, going forward, we would see certain improvements in the working capital cycle. Like when in the current year, we don't anticipate our working capital borrowings to go up despite the revenue increase anticipated, and only the term borrowing would go up, which would be used more for the capex. Yeah, of course, in the internal accruals would also help finance that. But that is the way we look at it. Right now the AMI SP, their payment terms are about 90 to 120 days, and being very strong private players, so I would say the quality of our collections or even they are much more on the firm dates. So that also helps the company in a good manner.
With respect to the opportunity size, which we can assume currently.
Can you be louder, Chandresh? Can you be louder, please?
Just a second. So. Hello, am I audible?
Yes.
Yeah, so second question is with respect to the opportunity size available. So what I'm trying to ask is like, as of date, 14 crore odd meters have been awarded to the MISPs. So how much of that would be, ordered to the meter suppliers?
No, so I will. I'll just, if you look at the figure on the website, I think it is 16 crores are nearly awarded to to the AMI SPs. But how many are awarded is probably there's no public figure in it. But my estimation would be maybe 4 crores meters could have been awarded, maybe 4 to 5, maybe it could be like that. So still a long way to go, and for the AMI SPs to release those orders to the meter manufacturers. Yeah. But they are one thing is sure, and I've said it earlier many times in previous calls also, that uh, the government is mandated to give these uh, through the tenders, they are giving out these meters to the AMI SPs. Now they also know that they have a 2.5, 3 years time to install and make the entire system up and running. Now, so they are not mandated to give the orders immediately. So how it is, the way I personally see the way industry is, that they are giving in parts. Of course, they are doing their evaluation, they are doing whatever, but they are giving the orders in parts to the meter manufacturers based on their performance, the way the supplies are happening, the way the integrations are happening. That is how any business, even if you look at a private business of switchgear or wire and cable or lighting, that is how it runs. The companies evaluate, and then they give out the requirements as and when they want it. But only thing in this, the difference is that we know the total requirements, we know that there's a huge opportunity, and that is flowing based on the demands coming in.
Okay, got it, sir. Thank you so much.
Yeah, thank you.
Thanks for your questions, Chandresh. Just a reminder, if you have any more follow-up questions, you can raise your hand again, and you'll rejoin the question queue. Our next question will be from the line of Reeth Ranawat. Reeth, your line is unmuted. You can go ahead and ask your question.
Thanks for the opportunity. So, can you give the share of the products under consumer and industrial services segment, like which one has the highest share and which one has the highest growth?
Yeah, so here if you look at the industrial and the consumer segment, this is made up of wire and cable. We have switchgears, which is the industrial and domestic switchgear. Then we have the lighting, where we have professional lighting. We have the consumer commercial lighting. Then we have fans in that. There are solar products in that. So it's a very broad range. So mainly, if you see the growth in the current year has been led by the cables. The wire and cables have been almost 24% growth. We have seen the domestic switchgear grow around 16%. Lighting has grown about 6.6%. But looking at the background of lighting, where we have seen a huge amount of value erosion happening in costs and selling price, that also seems to be pretty good, in the sense that at least it's come to a positive number, because 2 years before that, the entire industry was facing the issue of the prices falling down almost quarter on quarter. And so broadly, these are all the segments. So specific figures we don't give out, because this being a single segment. But overall, I think lighting seems to be coming back. In the industrial switchgear, we have seen certain slowdown in the demand from the industrial switchgear side. But I think it's pretty temporary, and that should come back within maybe the first quarter or the second quarter. That also should come back.
Okay, got it. And could you tell me like approximate number that how many meters are sold in a month, and also the utilization levels currently?
So we don't, the numbers we are not giving out, because just because of the competitive reasons and others. So we are holding orders of 3,500 crores right now. The numbers are obviously huge in that, but just from competitive perspective, not giving out too much details. So I think at least this year and next year, we don't see ourselves giving any number based or value quantity based data. So that we cannot give out. But the capacity utilizations have gone up pretty much. Also, the change in our we had a traditional meter infrastructure, which of course also was very good, no doubt. But now most of the manufacturing has been changed to the smart meter manufacturing. And we have also put in a lot of semi-automated lines. Sometime you probably can see on our social media whenever we are, unveiling a new line in different factory areas. So a lot of investment has gone in the last 2 years in terms of building specific capacities for electronic manufacturing. So that is, I would say, pretty much a world-class facility what we have today. Looking at the injection molding machines, almost the company today has practically, I would say, over 100 molding machines. We have tool rooms now. So in a way, a lot of capacity expansion for the smart meter boom, what we are seeing, has been already done like that. Yeah. So I think, but the utilizations also, if you look at what we started 2 years back, and if you look at the first quarter and even by ending on the fourth quarter, definitely the capacity utilizations have gone up, and still we still have a good upside, which we hope would happen in probably the Q2, Q3 this year.
Okay, got it. And the last question is that the production capacity increase, like, do you intend to increase the production capacity from 1.1 crores to 1.5? And if yes, then what's the time frame of it?
No, I think that would happen more gradually, because when we are like technically, if you look at the electronic manufacturing, what we have recently put up, and we've only last month we opened a lot of new machines. So maybe certain capacities or certain interim capacities are probably already higher than the 1.1 crore meter, from that perspective. But overall, as we are filling up the capacity, we would do that. So we are not in a hurry just to build up capacities. They are all scalable within a lag of 3 to 4 months. So right now we have sufficient capacity looking at the growth over the next 3 to 4 quarters. But as we are seeing let's see how the demand pans out, how the implementation is happening, and if need be, we can do that. But right now, I would say we have forecasted the demand, and we have already taken preemptive actions well in hand.
Okay, got it. Thank you so much.
Yeah, thank you.
Thanks for your questions, Reed. Our next line of question will be from the line of Ayush Didwania. Ayush, your line is unmuted. You can go ahead and ask your questions.
One, I wanted to know, I understood that the interest cost will be stable. I mean, and that's a good sign. Your sales have gone up at least, I think, 25% quarter on quarter. You think this run rate of 500 crores is somewhat sustainable, or is there some kind of seasonality in this?
Yeah, so in terms of it depends on both the divisions. So when we look at the consumer and industrial, there are
Yeah.
some part of seasonality which is there, because the Q4 is the strongest quarter, and
Yeah.
if you look at last 5 years,
That I'm noticing across all electronic manufacturers. Q4
yes,
is
that is it, because these are trade businesses, and trade normally works like this. So Q1 could be a little lesser. It would start Q2, then picks up, and then Q4 is the strongest quarter. So that
yeah.
part of business would see certain cyclical things. Metering, as I said earlier, also there are not much these type of factors in terms of seasons or anything, because the demand is very clear. The orders have been given out to AMI SPs, and they have a specific schedule to fix these. But that may change because of some monsoons coming in, or some things, some kind of
So
specific
should
issues we
we?
have seen in some states. But broadly, there is no cyclical thing. So overall, I would say for us, on an average, to look at, let's say, 500 crores over the next 4 quarters and reach that figure, that is possible. I think that is somewhere we're aiming to be. But it may quarter on quarter, it may change, or it may
But not as drastically. You don't expect to go back to 400 crores.
So it can, depends again on schedules, because of course going back would mainly mean the smart meters having this thing. But many times you have to realize that although the AMI SPs are ordering them, but there is a full proper process of once the materials are ready, so there are inspections done at the site, then there are dispatch clearances happening. At various sites, the implementations are there, and implementations also in the past, if you look at only the last 2 years,
Mm.
There are various factors which can which can affect the implementation. So you have to keep in mind. Of course, they are not in our control, and nor we are in that. But yes, if our customers face some issues, then it can always they can
Uh,
down.
one question regarding the fan business. How much have you scaled it up, and I mean, what is the groundwork? How much do you expect to scale up there?
I think right now we have not been giving specific numbers on fans. Hopefully, from
Mm.
next year we would start having it. But yes,
No, I'm not
we would be
asking
looking at.
for a specific number. The impression we were given in previous con calls was that there is some groundwork going on sales and marketing,
Yes,
on
yes.
on customer reach. So is that in place, and can we look at growth this year?
Yes. So no, this year yes. So there will be growth, but then since there is no previous year figure, so whatever we do is growth anyway. But this year the focus is on building new channels. So we are internally looking at, let's say, building up 70, 100 new dealer distributors across India who are specifically focused on the fan business. So that is something what we are doing. A lot of our existing channel, or let's say a good part of existing channel, we will leverage wherever we feel that they can accommodate 2 or 3 different products of ours. So these things are happening. I think we have already probably crossed the 100,000 mark of the first fans going out in the market. So
Oh
I think
wow.
overall the things are good. We've got a good feedback. We have also setting up the service network in each of the areas where we are launching. And
Yeah.
post June, July, post the summer season in North, because
Mm.
North is, of course, summer season is everywhere, but like post this, then we will be going into the southern markets because they have a much more uniform weather, and we feel the next, our launches
Can
would
you
be
come again? When will you go into the southern markets?
probably